Hey, what's going on, guys? I hope you had a fantastic week. This is the second episode of my Market Outlook series, where each weekend I'm going to be analyzing the kind of status of the market based on a couple different factors. So I hope you find this useful, and I hope you kind of use it to decide how aggressive or conservative you want to be with your trading. So first, I just want to kind of quickly go over the status of my weekly watch list series. And then we'll head over to IBD, then wishingwealthblog.com, and then back to analyzing the technicals of these stocks. So as you can see, almost every stock on my watch list ended the week in red, and many were down 7-10%. And this was kind of true all across the board, with the leading growth stocks taking a significant hit. And this isn't a positive sign for the market because even though the indexes are still holding up, you want your growth stocks to be doing well. And I was actually stopped out of all three positions I had in OLED, Twitter, and LSEC. And yeah, basically last week was definitely not a good one for growth stocks. Heading over now to Investors Business Daily, you can see that from their market pulse, the market is in a confirmed uptrend, but there's talk in this article a lot about how a lot of investments are transitioning from growth stocks into value and cyclical. And this isn't a positive sign, especially if you're a growth investor like myself. And you can see that on this past Friday, the day's leaders came from laggards in IBD's 197 industry groups. And that's not what you want to see. You want to see the top 20 groups kind of pushing the market upward, which is definitely not what we're seeing right now. They also mentioned how next week the Federal Reserve is going to be having some meetings regarding a potential rate cut. So keep that in mind with your investments next week. I also want to point out two more interesting articles from the past week. They did a whole kind of analysis of OLED and how they traded this stock and actually limited their losses, even though after this breakout, it fell right back and through the base. So I found this article really interesting based on their criteria on when to sell a stock. I think it's definitely worth a read because you can learn a lot based on how they applied William O'Neill's principles into holding and then selling this stock. And the other article that I found really interesting was how 7 big winners triggered long-term sell rules this past week. And they point out in this article that usually leading stocks sell off in bunches like this during a market correction. And again, this could be a negative sign for the stock market. But as you can see from the GMI of wishingwealthblog.com, we still have a green signal as of right now, and we are actually in the 6th day of the QQQ short-term uptrend. So now let's head into TC2000 and analyze the indexes directly. First, looking at the QQQ, you can see that it is doing pretty well overall. This past week and a half, it's been in a steady uptrend above its 30-day moving average, and from the volume, it seems to be doing fine. It is also above this past green line that it set this past December, which is also a positive indicator. Now looking at the SPY, you can see a very similar story to the QQQ. It's been doing pretty well the past week and a half, and it is also above its 30-day moving average. But you can clearly see when you look at the IWM, which is the Russell 2000 index, that it's been the mid-caps kind of holding up the indexes. You can see really strong growth this past actually 3 weeks or so, and look at the volume coming in this week. This really shows that funds are switching money over from the growth stocks that had been leading into kind of mid-cap companies. Now taking a look at the IBD 50 ETF, the FFTY, you can clearly see how growth type companies got destroyed last week. And this is a very negative sign, obviously, because I'm a growth type investor. So I want to kind of see this set up and recover and move above its 30-day moving average before becoming aggressive once again. And until that happens, I don't think this is a very conducive environment for profitable trading. So as I said, I'm going to be more conservative and only take the occasional very strong setup. Now taking a look at our stocks that were on my watch list, looking at BLD, you can see that it wasn't really affected by all the weakness in the growth stock names because it's a construction company, so it's not quite in that category. Looking at Coop, you can see it was affected, and it has actually activated a bunch of Bollinger Band indicators down here. If you're wondering how I made this indicator, you should check out the video that I'm putting on the screen right now. I think the Bollinger Band breach is an excellent kind of decision criteria for an entry point, so I highly recommend that video. But obviously Coop is not set up right now for an entry because it's still going down. You want to wait for it to come down, then turn up a little bit and set up correctly. Now taking a look at CSGP, you can see a lot of weakness as well. On this Monday, it dropped 6% and it really breached this base that had been forming right here. So definitely this is one to really wait for it to reestablish a strong base before I would even consider investing in this company. Looking at EPAM, which had been setting up very nicely with a kind of VCP type pattern, you can see that on that Monday it really got hit hard with a 9% drop. So this really isn't a positive sign. HEI as well got hit pretty hard. iFi, let's take a look at this. It actually fared pretty well, so this is a positive sign for iFi because its relative strength must be holding up pretty well. Looking at Keys, you can see it is also doing relatively well, so this is another one to keep an eye on. LHX had a big drop on Tuesday but recovered, and since then has been kind of reestablishing that base that it had been setting up. LACC, you can see that I got stopped out right here on this Tuesday, and since then it has recovered reasonably well and is kind of continuing this base that's forming. Looking at Medpace, you can see that it actually had a PGO indicator out of this base, and this is a very constructive pattern right here. It's got a nice jump up on earnings, I assume, and then kind of a tight volatility contraction here before breaking out. So this definitely is a good pattern. Looking at Northrop Grumman, you can see that it was affected by the weakness earlier in the week, but then kind of recovered a little bit. Now looking at OLED, you can see that after this breakout, it dropped right back and through the base, which is a very negative sign. And definitely this is a company that, even though its fundamentals are good, because of this technical weakness, you want to wait for it to reestablish a base before considering trading it again. Looking at PAGS, you can see that early in the week it also had that weakness, but it's come back slightly. Argen, you can see, had a huge drop on this Monday of 11-12%, and it looks like a very similar story to OLED actually. Starbucks also experienced this big weakness on Monday and Tuesday. SolarEdge kind of continued the pattern that we saw for the past couple weeks, this kind of slow gradual decrease. But on this Thursday, it really dropped on a lot of volume, which isn't a positive sign. Taking a look at SHOP, you can see that on this Monday, it also dropped as well, and it's kind of fighting to reestablish that base. And you can see that this consolidation right here is actually acting as a support currently, and it's kind of bouncing up and down against that support. And finally, taking a look at Twitter, you can see that after it broke out and then fell back into the base, it's kind of been just kind of going sideways. And I think I was stopped out on this Tuesday, but since it fell back and kind of held this base that it had formed, if it breaks out again on more volume than this, I may consider investing in it. So that is the market outlook for this past week. I hope you found this video useful. As Mark Minervini likes to say, it's a market of stocks, not a stock market. And because all these big growth names are experiencing a lot of weakness, it's time at least for me to scale back my exposure and be more conservative. So it's up to you to decide. And please, if you like this video and found it helpful, please leave a like down below. And also, if you have any questions or comments, leave them down below as well. I hope you guys have a great weekend, and I'll see you guys in future videos.